Uneducated Economist here. Man, what a beautiful day in Astoria. It was raining really pretty heavily this morning, but man, right now the clouds are starting to separate. The clear skies are coming out. It's really nice out right now. Pretty impressive, really. All right, so we're still waiting for some people to get into the chat here. In today's video, we're going to be talking about why inflation is so persistent. Now, this is something that I had predicted quite a while ago when you think about it from the neutral interest rate. Now, the neutral interest rate is something that is when the Federal Reserve is neither accommodating nor restricting the economy. They're neutral. And this is something that not a lot of people talk about, and nor is there any place that you can go to look at where the current neutral interest rate is. Nobody knows exactly where it is. So now it comes up to the idea of where it is that the Federal Reserve is as far as their monetary policy and how restrictive it is comparatively to the neutral interest rate, which doesn't have a set number to it. Nobody can go and look at where the neutral interest rate is. So we have to take an assumption on where the neutral interest rate is headed. So is the neutral interest rate rising or falling? Well, when it comes to inflation expectations in the future interest rate movements that are going to come from that expectation, that causes the neutral interest rate to rise. Now, this is something you have to kind of really take into consideration, that it's more about what it is that you are thinking and feeling is going to be happening going into the future, and where it is that interest rates are going to be in accordance to that expectations, because that's going to be where the neutral interest rate is going to start moving towards. So if you have elevated inflation expectations, that's going to pull the neutral interest rate up. If you have low inflation expectations, that's going to lower the neutral interest rate, which is a major problem for the Federal Reserve when it comes to a low neutral interest rate environment. This is really where the Federal Reserve had run out of monetary policy. It was a low neutral interest rate, and the Fed funds rate had hit the lower bound of zero, meaning that their monetary policy had become ineffective. It was no longer a tool for stimulating the economy because they couldn't lower the Fed funds rate far enough below the neutral interest rate to actually stimulate the economy, right? Because of how low or how close to zero the neutral interest rate had become. So when they raised interest rates, it was very restrictive when they first did it, right? Boom, interest rates go up. They moved them up over the, quarter point or however long, they took them to get them up to where they leveled off. But it doesn't really matter where the interest rates move to, as much as it is the expectation of what's going to be coming into the future, right? So as they raised the Fed funds rate, it made it very restrictive on the economy at first. But as time goes on and people's inflation expectation becomes elevated, the neutral interest rate begins to rise, becoming ever closer to the Fed funds rate, meaning that the restriction to the economy becomes less. This is one of the reasons why we are experiencing as much inflation as we are, even though the Federal Reserve has their monetary policy set at a restrictive level. The neutral interest rate is rising. And this is something that Kashkari, who is a voting member of the FOMC, is starting to recognize. Well, I don't know if they're starting to recognize it, but at least they're coming out and stating that this may be the situation that has taken place. This is something that we had talked about here on this channel a long time ago, right? Knowing that the neutral interest rate was a major problem for the Federal Reserve being as low as it was, this was one of the reasons why they were looking for an elevated inflation expectation coming into the future. Remember, it was John Williams' speech talking about the low neutral interest rate world and how to deal with that for monetary policy, because the inflation expectation had been persistently too low rather than too high. So again, this is part of the Federal Reserve's monetary policy, in my opinion, is that they could keep the Fed funds rate steady right where it's at. And if you can continue to push the information out there that leads the markets, the people, the economy into an idea that there is going to be inflation headed into the future, or an elevated inflation, that will raise the neutral interest rate, and literally the perception of there being a higher inflation raises the neutral interest rate, which makes the Fed funds rate less restrictive on the economy. Isn't that crazy? So to put out an inflation expectation that is elevated over time will actually make the economy less restricted if the Fed was to keep the Fed funds rate at the current level that it is. Isn't that amazing to think? I mean, it's like so many people have no idea that there is a neutral interest rate that the Federal Reserve even looks at, because there is no chart you can go to. I mean, if you want to see where the Federal Reserve thinks neutral interest rate is, you can go and research something called R star, right? And that's the Federal Reserve's best guess on where they feel neutral interest rates are. All right. So we're 5 minutes into it. I'm going to keep it a short one like that because I think the discussion on this is going to be really good. There's probably a lot of questions that are going to be had for this because it's such a far off concept to try and understand where the neutral interest rate is because of like no chart that you can go to look at it. So you really have to look at where it is that people feel inflation is going into the future and what that could do to the neutral interest rate, right? Which direction is it headed? All right. You're ahead of the curve. Yeah, thank you, Crypto Beauty. I appreciate that. And I really do feel like I'm ahead of the curve, but it's not necessarily ahead of the curve. I think I'm just ahead of the corporate media. That's it. Like, the Federal Reserve has been talking about this stuff, and they're not keeping it secret from the other bankers out there, right? Because you can find it in their speeches, you can find it in their documents, and they're talking when they're communicating with each other through those speeches and communications like that. But if you're following it through the corporate media, then they're not going to tell you about it. That's the monetary policy, right? Is to put the idea out there into the corporate media that then guides the markets into the direction in which that the Federal Reserve would feel is most appropriate for monetary policy. Like, that literally is the monetary policy, is the communications into the corporate media, right? The idea of adjusting interest rates is part of that communication. The actual adjusting of interest rates is no longer an effective tool for stimulating the economy, but nobody knows that. That's what's scary about it, is nobody realizes that that is no longer an effective tool for stimulating the economy. Think about it like this. There was a belief out there before the pandemic, right, that the neutral interest rate was really close to zero. Like, they didn't know exactly where it was at. Somewhere between 0 and 1.5% is what they were kind of assuming, right? So let's just kind of think about it from a 1.5%, right? Let's give it the high end of things. If the Federal Reserve was to lower interest rates right now, right, they would have to lower them so significantly in order to get below the neutral interest rate that there is no adjusting of monetary policy to actually stimulate the economy. Because even if they were to cut it 1, 2, 3, 4 percentage points, they may still not be below the neutral interest rate, right? You see where I'm saying is like this, the cutting of Fed funds rate and lowering the Fed funds rate doesn't stimulate the economy because they cannot get below the neutral interest rate far enough to actually do the work of the stimulation from the lowering of interest rates. It doesn't work anymore. Like, this is part of their communications with each other. They know this. They know that the monetary policy of adjusting of interest rates does not work. But the belief does. And that's incredible to think, right? The actual movement of the economy through the perception of where interest rates are going is the real monetary policy. Because lowering interest rates doesn't do it. Like, you could lower interest rates 2, 3, 4 percentage points and still wouldn't do it, right? It would be at a neutral interest rate. However, the people belief does. And so if you can put the belief out there and then you run into situations where you have, economic problems, financial crisis or whatever, then you can go into the stimulus packages where the fiscal policy then steps up and starts spending money like crazy. Because the monetary policy and the lowering of interest rates would typically have people out there borrowing money to buy cars and houses and go on vacation and spending that money into the economy. But because the lowering of interest rates doesn't do that in a significant fashion like it had in the past, that means that the government has to step up and spend that money. That's where the fiscal policy comes in. This is one of the reasons why so many people are focused in on politics as being like such a contributor to the economy, right? Is because this is the way that is now set up, because we as the individuals within the economy no longer stimulate the economy when they lower interest rates. It doesn't work like that anymore. And it's important to understand this. Like, you can blame the government for all kinds of money spending and dumping it into Ukraine and all that other stuff. If they didn't do it, our monetary policy would come to an end. All right? And then, we would be in the poorhouse. Not that we're not already. All right. Do you think travel prices for airplanes are going to go up in the next 6 months? I don't know. Sell all your gold and silver. It's reached its peak. I don't think so. Besides, like, Steve Van Meter fan, I see. Yeah, I'm a Steve Van Meter fan. I haven't listened to him in quite a while, but yeah. Thanks for your insight. How do they come up with the neutral interest rate? Well, like, how do they figure it out? Like, go and research R-star, and if you can figure out how it is that the Federal Reserve does their mathematical formulas for figuring out R-star, I would love for you to explain it to me, because I've tried several times to figure that out. And the best that I can come up with is they have figured out a formula for taking inflation expectations at the current level and considering where inflation is going to be going into the future on where interest rates are set today and what that perception is going to be. So I don't know exactly how you're going to come up with a mathematical formula to figure out where you think inflation expectation is going to be in the future according to relations to the interest rates today. But that's ultimately what it is, right? And so again, like, how do you figure that out? Like, if you change the inflation expectation today and people all of a sudden no longer have the inflation expectation that is so elevated as it is today, the neutral interest rate would begin to fall, right? So literally it's the perception that people have. That's what raises or lowers the neutral interest rate. And since there's no way of gauging that, there's no way of telling where it is that the neutral interest rate is, right? Like, they can figure it out after time has gone by. They can say, well, neutral interest rate was here or there, but they can't do it at the moment. All right, short answer: government is spending $6 trillion with little less than $4 trillion in income. All right, crypto beauty: they look at the direction of employment and inflation derivative. All right. Brody, Simon, do you think they'll have a reason to cut rates at all? If R-star is rising, it is possible they just don't. That's right. They could literally, if the neutral interest rate continues to rise, if the inflation expectation continues to be elevated and it continues to raise the neutral interest rate going into the future, and the Fed stays right where they're at, the neutral interest rate will become ever closer to the Fed funds rate, making the economy less restrictive. And in a way, it's not stimulative, right? But it's less restrictive. So in a way, that's sort of stimulating effects, right? So if you think about it, if the economy is not set in a position that is restrictive enough, if we continue going into the future and the neutral interest rate rises, then the Fed would probably have to raise the interest rates, the Fed funds rate, just to keep in pace with the neutral interest rate, right? To keep the economy restricted, as opposed to letting the neutral interest rate rise and becoming less restricted. So yeah, it's a possibility that they just don't raise rates and let the neutral interest rate move closer to the Fed funds rate, essentially stimulating the economy. All right, Simon, you work hard with a full-time job and young family. You make an effort to find the latest and greatest information on the economy. That's old school. Well, thank you, Alberto. Man, I really appreciate it too, because I really do feel that I put a lot of work into this stuff. Like, I go beyond just trying to find news articles out there so I could report on them. I actually dive deep into some of the deeper information, working papers, the speeches, like all this stuff. It is a lot to sift through. Like, it's a lot, right? And in the early days of my studies and stuff, it was really difficult because I didn't know what the hell to even look for. Like, I didn't know which direction. I had like all these like weird conspiracy theories that were ripping through my head at the time, and it took me a lot to finally just focus in on monetary policy. Like, just to center in on what it is that the Federal Reserve is doing with interest rates, the balance sheet, understanding that neutral interest rate. This is really important stuff because it spans administrations. This is where I think a lot of people just they get so focused in on the current president or some of the laws in Congress, whatever that's going on, but they don't realize necessarily that this monetary policy is spanning, not just administrations, but it's going on for decades, right? I do reports on speeches given by Ben Bernanke before he was even, chairman of the Fed. We're talking 22-year-old speeches, and listening to some of the things that they were saying back then, they were talking about these events right now that we are experiencing. Like they were talking about them 20 years ago. They knew they were coming, right? Now, did they describe them in detail exactly the way we are experiencing it? No, right? How could they know in detail what it was going to be like? Nobody can predict the future, but they knew monetary policy was coming to an end. They knew it a long time ago, right? That's why Ben Bernanke was talking about that damn gold machine and the idea of what it would be like inside of the gold market if a guy was to invent a gold machine that could produce gold at will with very little cost or energy. The moment that information gets out to the market, the price of gold would plummet. Even before the guy produces a single ounce of gold or has the machine to do it, just the credible threat alone is enough to move the markets. They knew that back then, back 20 years ago, that would be their monetary policy, is that damn gold machine, right? Their words, their jawboning, their signaling, the forward guidance. That's the monetary policy. And it's so important to understand that, because everything that you are seeing within the corporate media, every time one of these Fed officials comes out there and they flapping their gums and people are doing these news reports and the whatever, the news anchor there is asking them questions and all that stuff, that is all of it, 100% propaganda. There's not, the information is real. I'm not trying to say it's fake information. The data, the points, the numbers, all that other stuff it's right? Kind of right? It is truthful information, but the way that they present it to you gives you a whole different belief of what it is that's going on out there. Like if you were to follow the corporate media or the mainstream media, you would have a belief that the Federal Reserve actually trying to bring inflation down. Right? That would be the belief. Like we lost control of inflation. Oopsie. Don't know what to do about it. I don't know. Like this is like a lot of what you see out there within the corporate media. And then you have a whole bunch of other people out there who are reiterating that information, saying that the Fed is dumb. They don't know what they're doing. They've lost control and inflation is going to run rampant. And that idea right there coming from the people is the reason why the Federal Reserve is able to continue on with their progress. Is because they needed the inflation expectation to be persistently high, and it's working. It's totally working for them. Okay? And understanding it from that fashion gives you a whole different edge. Right? Most people think that the Federal Reserve failed. They didn't fail. The only thing that people are misunderstanding is that the failure of what it was that they were doing is that they couldn't find inflation prior to the pandemic. That was their failure. Right? Quantitative easing 1, 2, 3, and 4 failed to produce the inflationary scenario the Fed was looking for. Yeah, we can pinpoint all the inflation that was experienced during that time. It doesn't matter what we think. Right? We can say the employment numbers and all the GDP. We can come up with all these accurate numbers, look at shadow stats and all that other stuff. Doesn't matter. It really doesn't matter. Whether it's my opinion or your opinion or anybody else's opinion out there, it doesn't matter. Why? Because we're not in charge of monetary policy. The Federal Reserve is, and it's the numbers that they are looking at that is going to be important, right? We could show them the real numbers. It isn't going to change their mind, right? They're going to go off of whatever numbers it is that they are looking at. And so when it came to quantitative easing 1, 2, 3, and 4, that failed to produce the inflationary scenario that the Federal Reserve is looking for, we have to understand why that is. And it was because when money printer goes burr, if that money ends up in the big bank's balance sheet but never actually enters into circulation, how is it supposed to chase the goods and services and start throwing the supply-demand imbalances off? It doesn't. That's why it didn't work. Like if you have to borrow that money into an existence, well then houses and cars and stocks and bonds and those things might go elevated in price as the asset prices move up. But everything else that just doesn't use credit to make purchases doesn't move. And that's why we didn't experience the inflationary scenario back then as we do now. It's because all the money printing that had happened came out in stimulus checks. People got those in mass quantities, right? Not everybody got them, but enough people did. And then they told them not to go to work, so there was no distribution taking place. What happens when you zap the inventory and you have no new inventory coming in? Supply-demand imbalances, right? Prices move. It's easier to see if you think of it more as a game plan that they had orchestrated 20 years ago. Because once you see it from that fashion, it makes it a lot more sense. You can start calling out why we were going to have a recessionless recession. How many people are talking about missing the recession or recessionless? You know, like, where's the recession? How come we didn't see it? You know? It's because the recession was already pre-bailed out. And we're going to find out about that once it all comes to an end. And people are like, man, where did the recession go? How come we didn't get one, right? It's because we are experiencing it right now, but we're not going to get the bailout because it's already been bailed out. It got bailed out during the pandemic. Right? A lot of people don't realize that. Right? All these corporations, all the places where the government looks for employment, for people to be employed, all these corporations got an insane amount of funding during the pandemic. And it didn't even come from the government, it came from the market itself through the use of special purpose vehicles. And again, the credible threat theory, right? You set up a special purpose vehicle with the Treasury, you fund it with hundreds of billions of dollars, and you go out on the mainstream media and you put a whole bunch of attention to it. Talking about how the Federal Reserve is going to be picking the winners and losers, and how, you know, the whole government is now buying into the corporations and they're bailing out the corporations and all this other stuff. And they didn't do it. Like, they set up the special purpose vehicle, they put out the idea that they were going to be buying this debt, that the Federal Reserve was going to go and do it. But just that information alone got the markets to go and front run the Federal Reserve, and these corporations were able to find the funding that they needed before the Federal Reserve even set that special purpose vehicle up. Right? This is how they operate. In understanding it in this fashion, it starts to make things a lot more clear, even though it's such an obscure way of doing monetary policy. But once you get it, once you understand the credible threat theory, once you understand that this is how they conduct themselves through the signaling, through the forward guidance, through the corporate media, once you get it from that fashion, it's so clear. It makes it so much clearer to see. All right, guys, I am really going off this morning. I'm sorry. Let me read some of these questions. My goodness. All right. I refuse to believe that the Fed or someone in the government is that smart as you have described. Well, okay, straight drive, I would totally agree with that, except I have all the documentation. Like, I have all the documentation from the speeches, from all the different Fed governors out there. I mean, you think that the Federal Reserve doesn't know about how much dollar demand exists outside of the United States? I mean, I don't think people really even take that into consideration, that corporations, sovereign nations, individual people have taken out debts in dollars. They don't have anything to do with the United States. They're not a citizen, they're not a corporation, they're not a bank, they're not part of the government. They have nothing to do with the United States, but yet they wrote debts in dollars. They're due in dollars. Okay? You know who was a major doer of this, of taking out debts or issuing debts in dollars? Was China. You want to read an interesting paper? Go and read this one right here. Dollar funding stresses in China. You want to see how much demand for dollars actually exists out in the world? Read this. This is just China. They're not even talking about the rest of the world. They're just talking about China and how much demand for dollars China has. Okay? And this is coming from the Federal Reserve itself. This is Federal Reserve Bank of Boston. This was written November 1st, 2022. Right? This is fairly new. And they go into talking about how China went and lent out money to all kinds of nations out there so that they could do their infrastructure projects, build highways, coal mines, power plants, all this other stuff. You know, China lent that money to them in US dollars. So if the dollar was to strengthen and making it ever more difficult for these nations, these sovereign people, these corporations, whatever, to try and acquire dollars to pay back their debts, you know who that's going to benefit the most? It's going to be China. Because if they can't pay their debts, guess what? China's going to repossess all those things, all that infrastructure projects. Or China gets paid one way or the other. They get paid back in stronger dollars. You see, so if the dollar strengthens, it's going to be a benefit to China. And the Fed knows that. Now, it's not going to be all, like, you know, going to be all peaches and cream, but it's going to be, you know, a lot of people who think that, you know, don't take this into consideration, don't realize how much demand for dollars actually exists outside of the world and how difficult of a task it is for the Federal Reserve to try and acquire the assets that they need to print the money up to make sure that they can fund or have the liquidity to cover all these debts. Think about it, like the government is going into massive amounts of debt issuance so that the Federal Reserve would have something to buy to create the dollars. I know that's not what a lot of people want to hear or even believe, but that is the case of it, right? Because if you go back and you read Ben Bernanke's speech talking about deflation and how to prevent it from ever occurring here in the United States, they talked about buying sovereign foreign nations' debt in order to put on the balance sheet to give them a broader range of assets to buy. This was Ben Bernanke talking about it 20-something years ago, buying foreign debt and putting it on the Fed's balance sheet and printing up dollars, US dollars, right? Think about what the world would look like if that started to happen. Which is still mine. I could see that happening in a digital currency too, you know? All right, they use our mortgage instead of taxing the upper class now. I can't even get a small car loan, forget about getting a mortgage. Well, here's the thing, guys, like if you're, and I don't mean to sound so discouraging to the people out there, but if you are not sitting in a position in which that you are elevated amongst everybody, above everybody else, like you make more income, you have family, you have something going on out there that gives you an edge above everybody else, there's no way you're getting a house. It's just sad, right? It's sad to say it. I don't like the idea of it. I'm not trying to be a dick. What it comes down to, though, is that there is simply not enough houses for everybody, right? And if you go back through history, you're going to find that this is a similar circumstance that takes place when you have an abundance of money in the system. There is no better sign of it than the cost of leases and rents. When they are at an extreme level, you are showing an abundance of money within the system. When you have an abundance of money in the system, you have a huge separation between the rich and the poor. And it's going to get worse so long as the new money continues to pour in. If the new money doesn't pour in, we go into poverty and misery. So there is no fixing this. There's no fixing it to make it so that everybody can live in a house. If you are not taking a strategy on that is beyond everybody else's, thinking that you're going to go to a 9-to-5 job, cut back on all your expenses, save up a bunch of money so that you can put a down payment on a house, you're gonna be working really goddamn hard. And I don't mean to cuss in such fashions, but that's really what the case is. It's not going to work like that. You might find some areas in the country that it might do it, but for the most part, when you have a median mortgage of $2,775, if I think I got it right, there's nobody out there who's really going to be able to do that in a consistent basis that is working an average job. It just doesn't work like that. There was a time it did, right? But things have changed. The Cantillon effect has now run rampant through our economy. The separation between the rich and the poor is extreme. It's only going to get worse. Okay? And the idea of it, I mean, it's just better to accept the fact that it can't be done in the traditional sense. Once you have accepted that, now you can move on to other ways of getting into a house. It's not impossible. The traditional way pretty much is, but it doesn't mean that you can't get in, right? This is where the idea of house hacking or, figuring out how to team up with other people in order to step into real estate. There is ways of making it happen, but it's not going to happen in the way that it was traditionally done. I mean, for some people it might, but it's going to be very difficult to do that in a general way. All right. I lived with my folks for 3 years and saved up a down payment. That's what I'm saying. Like, that's not necessarily like when I graduated high school, the night I graduated, I moved out and I never moved back to my house. I never moved back in with my parents. That was it. I was on my own. Right? Now, if there was an opportunity to move back in with them, then 3 years of like saving every dime, yeah, right? But most people probably don't have that opportunity, right? Most of the time when people get to 18, if they're lucky, their parents might buy them some college or something like that. But for the most part, after they graduate high school, you generally have to go, right? I mean, that's like, I mean, I know nowadays it's a little different, but back in my day, like after you graduated high school, your parents didn't really give you much time, right? Maybe a year, for some people. That one concerns me. Wealth inequality increasing is going to lead to civil unrest. The average Joe can only tolerate so much, in my opinion. Yeah, and here's the thing about it is that the unrest comes once 50% of your income goes to buying food. Like, you will flip out, right? They know, like, they've seen it in other countries. Like, once you get to that point, like, people are already pretty pissed by that time, but once you get to 50% of your income goes to buying food just to survive, they will riot. Like, people lose their shit, right? And so when you have the concept being pushed out there that you will own nothing and be happy, think about what it is that they're trying to do, right? What it is that's trying to be, what's trying to happen right there is that if you are satisfied enough that you at least eat food and you have some sort of like idea of pleasure, then most likely you're not going to do anything to disrupt it. Right? So long as you eat and you have some idea of pleasure, right? And now, if you think about what is wealth, right? From Cantillon's essay, wealth is food, conveniences, and pleasures of life. Well, food, conveniences, pleasures of life. Think about how entitled, how quickly, how accessible everything is nowadays to the younger generations. They don't really have to work for that stuff that hard, right? I mean, you do have to work some, but it's not like incredibly difficult to find food in this nation. I mean, EBT cards and everything else that's out there, right? Conveniences? Well, I mean, everybody has a phone. Think of all the conveniences that come from your phone. And pleasures of life? Well, again, so many people are addicted to the internet and stuff like that. They don't need to go anywhere to find any pleasure. They can do it all from just sitting in over there on that park bench right there. They don't need to do anything. And so the idea of like working hard and not having anything in your life, nobody cares. They don't work. Hardly anybody cares about that idea. Like, they don't even want to work hard. Like, they don't even want to go to a 9-to-5 job just to make sure that they can have the conditions of their life, right? They think a 9-to-5 job ought to provide them with all the conditions of their life, plus the entertainment, plus the good times, plus the retirement, plus this, all these other things. No, it doesn't work like that, right? A 9-to-5 job will give you the ability to make it. If you want to make it good, you're going to have to do a lot more, a whole lot more, right? But this is what they have the condition of the world to be in, right? People don't strive. They don't need to. They have all their pleasures, food, conveniences. They have the wealth that they need, and they don't even have to try for anything. So yeah, when you have the inequality taking place, it's because most people are satisfied with being at the lower end, right? In fact, they're so satisfied with it that they get annoyed with other people who are then making it, separating themselves from the lower class and moving up into the higher, wealth classes. And when they do that, the people down at the bottom who aren't trying say, hey, you guys are a bunch of jerks and we should tax you because of what you are doing. Like, to me, I'm just so lost on this whole idea. So here you want to tax these people, make it more difficult to get into that position, which then secures the lower level, right? This is where you'll be, because you're making it more difficult to try and get up there because you don't like those people being all wealthy. I don't get it. Like, I see that and I just shake my head. Yeah, it was just like, man, go find some side hustles, would you? All right. I feel you, Simon. Yeah, we did. Okay, moving down. Parents supplement the younger generation's income. They really do. I lived on a sailboat for a year. There you go. It was less than 2% of the home inventory that went on the market in the great financial crisis. It didn't take as much as people think. Yeah, but there was a difference inside of that. The difference being inside of that one is that we had a huge build taking place during the great financial crisis, right? So there was a lot that was happening that's not happening like right now. And right, at the time, there was a whole bunch of people who got mortgages who really shouldn't have gotten the mortgages. Right? So now we have people who have mortgages that are a lot more qualified for those. And we've had a huge price increase taking place over the last couple of years during a time in which that not a lot of homes were sold. So even though the house prices have moved up dramatically and have a lot of room to come down, over the last couple of years where the prices moved quite high, there hasn't been a whole lot of homes sold at those levels. Right? So you think about, like, most of the homes were purchased prior to that. If you have that many homes being purchased after, or very few homes being purchased after that, all the high increased prices that will then churn those mortgages underwater isn't as prevalent within the system as people might think it is. Right? Like, I even consider the home that I purchased 2 years ago, a little over 2 years ago. The amount that it has gone up is like, I don't know, 20%. Some ungodly money. It had gone up like 30% at one point. From the time I thought it was expensive when I bought it, and then when I saw the ZELLE estimates send it to the moon, I knew then. It was just like, okay, there's going to be a huge amount that comes out of this house. I knew it then, all right? But if you go from the peak of what my house had estimated at, and I understand the ZELLE estimates are not accurate, whatever, I forget, like $100,000 has come off of that price tag. Like, if you were to price that house out a few years ago and then price it today, you'd be like, look, this house has lost $100,000 off the price tag. It is still $70,000 more than what I paid for it. Right? That's how crazy the situation had gotten to. It doesn't make any sense at all. Right? But the fact is that the house prices have moved up dramatically over those 2 years. And now that we see the prices coming down, they need to come down to where they were 2-3 years ago before we start seeing the houses that were purchased then start to go underwater, because there isn't that many over the last 2 years. Like, where does the flood of houses come from? Like, all these people who refinanced their houses during the pandemic, why would they get out of that low interest rate loan? Why, when rents are so high, they wouldn't just rent the property out if they couldn't make the payments? Why wouldn't they just sell it? Right? Most people who are sitting in a house right now are probably not sitting in one that they have purchased in the last 2 years. All right, moving on. Assuming you agree with the assumption I made in my question. Oops, I missed the question. All right, hey Simon, what was it which allowed your generation and the one before it to make it so much more readily than subsequent generations were able to? Was it the currency being fixed in the past? Well, there was a lot of reasons that it was easier to get into a home in the previous generations. And the main reason is because of the high standard of living that we had from being a mass producer of the world's products, sending the world those products, and the world sending us their money. That gave us a very high standard of living. That means that we could then enjoy the things that we would find pleasurable in our life for a lesser price. Like, you think about it, one income Think about back in the day, like one income was enough to produce enough for the entire household, for purchasing the house, to provide the food, to provide a car, to provide college, to provide retirement, right? Like that all came from a single income. Well, that was because we were producing so much wonderful stuff for the world, and the world was sending us their money. All right. Just like any business out there, like if you have a really good operating business and you are just supplying the town with all these great products, then you're probably going to do quite well, and you're going to have a much better standard of living from that. So that's the main reason right there. Like I don't believe it had anything to do with the currency or anything else. Like, I mean, there's a lot to do with that, but it had more to do with the fact that we were a production nation, right? Being a producer saver. Now, at the time, we also had houses being constructed in a way that was not nearly as complicated as it is now. And now I'm not saying that houses are so complicated that they can't be built, but back in the 80s and even prior to that, like, it didn't take much carpentry skills to build a house. Like if you had some basic skills and a handful of tools, then you could construct a house. Like, I mean, they aren't that hard, really. I mean, they're not, you know. And so back in the day, you had smaller need, like first back in the day you didn't even need that much of a house, right? I mean, it was just like you just needed basically a room and a kitchen and bathroom, right? And, you know, a place to sleep and a place to cook, you know. And so that was like, the houses were pretty simple back in the day. Now they're a lot more complicated. So if you can imagine back in the early 80s, even a guy who was working at a regular old job could stop at the lumber yard on the way home, pick up some lumber, and construct their house over the course of a summer. Like, you know, houses could take, you know, 3, 4, 5 months to build, even longer if you wanted it to. And it wasn't uncommon for that to be the case, right? So houses were much easier, the permitting was easier, the construction was easier, the material cost was easier, everything that went into it, our standard of living was higher, so we were able to purchase all those things for a cheaper price. So all those combinations of things made it a lot more convenient to have a bigger inventory of homes than it is today. Less people even know how to do carpentry, let alone have the ability to actually construct a house. But then all the permitting costs, the expensive material, the expensive labor, the expensive everything that goes into this house, then you have to have a product that is going to be worth the amount of time and effort and energy and cost that went into it, which means it's probably not going to be a simple little tiny house. It's probably going to be a fairly extravagant home that has a lot more value to it, so that it makes it worth it to put all this time and energy and effort into actually constructing the home. All right, this is one of the reasons why a lot of builders don't build cheap homes, is because there's no profit margin in it. Right? Like if you build this little tiny easy starter home, there's no the profit in it is such a small amount that it doesn't make it worthy. Right? So they go for the biggest, baddest house they can to sell it for the most money they can, so that they can make the best profit off of it. All right. Let's see here, 359 people watching. Thank you so much. I'm gonna give it like another 2 minutes, and then I gotta call it quits. All right. Inflation isn't coming from money spent in Ukraine. Best thing that could happen to the U.S. is to keep Russia busy and isolated. Dollars well spent. How does it create inflation if the dollars go over to Ukraine? Right? Then Ukraine has it. Like, that's not dollars in the United States. Dollars in the United States is creating inflation. Dollars outside of the United States is exporting inflation. So spending money in Ukraine or sending the money out of the United States is actually a way of trying to provide the world with liquidity when you can't just buy their stuff, right? I mean, you got to give them it away, literally. You know, this is, again, like, a lot of times we see things like, oh, look at all this money that they're dumping into Ukraine, right? And I would agree with a lot of people's sentiment on that, like saying, hey, this isn't a good deal, it's tax dollars, all this other stuff, political, whatever crap you want to, you know, tie to it. However, if you take it back a little bit further into Triffin's dilemma and understand what Triffin's dilemma is, then you will know that the United States has a problem. And that is, how do you get the dollars out to the rest of the world? especially if you want to be a production nation. You can't. Like, if you are producing stuff, then what you are doing is you are exporting stuff and importing dollars. But the world is demanding your dollars. So how do you get the dollars out there to the rest of the world? You got to buy their stuff. What if you can't buy enough of their stuff? Then you better give it to them. You better give it to them. All right. Somebody would have to be a real Satanist to have Jesus as their name on here. Well, I would imagine that if you are Mexican, Jesus is probably a pretty common name. All right. All right. Instead of buying a $120,000 Dodge Ram TRX, I would rather buy gold bars with it and double my money in about 3 years when the dollar collapses. Bryce, I had that exact same idea with silver back during the great financial crisis. You know, I'm still waiting for silver to recover to the point that I would actually get my money back. How many years later now? Like, I dumped all my money into silver when I didn't have the money to do it because I thought that the dollar was collapsing. Come 2011, I thought I was the smartest dude in the world. I thought, man, I am so glad that I put all this money into silver. The dollar is failing. It is so failing. Now, I didn't cash my silver out where I could have and made a bunch of money off of it, off of the profit, because it was close to $50 an ounce at the time. No, I held on to it because I thought for sure the dollar was going to fail. Well, then silver started to fall from $50 an ounce down to 40, down to 35, down to 30, down to 20, down into the teens. And now I had dumped thousands of dollars into silver that I cannot get back. Not even today. How many years later? 11 years later? Still waiting for my opportunity to get my money back out of silver. Can't do it. Not yet. All right? It didn't work for me. It didn't work as an inflation hedge. It failed me big time. Now, on the flip side of that, silver totally saved my ass too. Because I had all that silver, and when I didn't have a car and I couldn't make it to work and I didn't have any way of finding any kind of loan or possibility of a loan or any kind of money out there, I called up my buddy. I said, hey man, you got that Tahoe for sale? He says, yeah. I said, you take silver and trade? He says, oh, you know it. So I pulled out 165 ounces of silver. He drove that Tahoe up to my place and signed the title over to me. And I thought, oh, I will never be without silver again, ever, right? That is the insurance policy of all insurance policies. I love silver. I absolutely love the stuff, but I am not married to it. Okay? And to think that it's going to be going up to $50 or $100 or $500 an ounce, yeah, I already played that game. I'm not interested. Not interested at all. All right? If it goes, cool. I'll be there, man. But other than that, I am not putting any kind of faith or idea into an inflation hedge coming from silver. It doesn't work for me. But it does work for an insurance policy, and it does a great job of it. And man, when I have that not even belief, when I have that knowing that I have that away from that third party claim where I don't have to worry about like what's going on with the banking system or governments or anything else out there, that's what gives me the ability to sleep at night. I would not have that ability if I didn't hold the silver. All right. Super important. It's very important to hold on to, but it's also important to understand why it is that you are holding on to it or why it is that you're buying it. Because I had that same belief, right? That if I put all my money into silver, I'm going to be protected, and it didn't do it. It actually worked against me. Now, granted, in the long run, it was kind of a benefit, right? Because I had it for the insurance, but I just don't believe it's going to protect me from inflation anymore. There was a time I did. I just don't. You know? Alrighty, what time is it? Alrighty, guys, I've got to go. This was a lot of fun hanging out. I really appreciate everybody joining in on this live stream. We got 369 people watching, 371 with 113 likes. Hey, Deja Vu, there is no gimmick. That's right. Silver for barter ability. Yep, I totally get it. All right. Thank you, Simon. Have a good one. Yeah, you as well, Will. I appreciate you all being here. Thank you very much. Uneducated Economist. You guys let me know.